From that recap of the main headlines this hour, it's time now to move on to the latest business news. And Brian Quinn joins us here in set. Brian, we're starting out in China, where those much anticipated trade talks between Beijing and Washington are set to take place.
That's right. Trump's team arrived in Beijing Thursday for urgent trade talks as threats of tariffs between the two countries have escalated. Their main target, of course, is the $375 billion annual trade deficit between the U.S. and its largest trading partner. Trump wants that cut by $100 billion, demanding China buy more U.S. exports to even things out. He also wants Beijing to move away from an industrial policy that effectively subsidizes Chinese companies on the global market and compel U.S. rivals to share key technologies. Now, for more on the story, we're going to turn to Katrina Yu. She's France 24's Beijing correspondent. Hi, Katrina. Now, what is the outlook for these talks? Is there a lot of hope for progress going forward?
Well, Brian, we saw that Robert Lighthizer spoke recently at a U.S. Chamber of Commerce event, and I think he said it best when he said that he's always hoping, but not always hopeful. And I think that's definitely the sentiment of both sides. Hua Chunying, who is also the spokesperson for China's foreign ministry, said, look, that we have a lot of disagreements on this issue, and it's not possible for all of this, or it's not realistic for all of this to be solved in one consultation. As you mentioned, there's a lot of issues on the table. We've got this trade deficit. We also have a disagreement over Made in China 2025, which is China's 10-year plan to transform itself into an innovation powerhouse. And we also have issues with intellectual property and security. So while both sides say it's possible we might see some small ticket discussions, such as China maybe opening up its financial market a bit more, maybe making some small gestures in terms of protecting intellectual property, we're not likely to see anything big and, unfortunately, anything that will really dial down the tensions enough for us to see this trade war really take a step back.
Right. Well, Donald Trump seems to alternate between bluster and conciliatory tones, but often a lot of trade threats there. Now, in the past, China has generally responded to that kind of criticism with conciliatory rhetoric, but it sounds like they're taking a harder line this time. Why do you think that is?
That's right. Well, China, as China sees it, is in a stronger position than it's ever been before. And I think China itself is quite dismayed that the West seemed to have this impression that it's in a weak bargaining position. The way China sees it, it's more powerful than it's ever been before economically, as well as diplomatically. It has more influence on the international stage. It comes out with its Belt and Road program. It's also been quite vocal on issues regarding the Korean Peninsula. And as well, we've just seen President Xi Jinping lift or the Communist Party lift term limits on his presidency. So the way China see it, they're big enough not to be bullied around, basically, by the United States. And they're definitely not in a position to make any compromises which they see will harm China's economy and harm the Communist Party's vision for China. So that's how they see it in their eyes. And they also think that President Xi Jinping is going to be able to outlast President Trump when it comes to these trade disagreements.
Could be. Now, Trump blames this trade imbalance on Chinese policy. Is that really what's going on? Are there other causes at work for this giant trade deficit?
That's right. So the Trump administration definitely has blamed this on the fact that China is simply not buying enough goods from America. But the way China sees it, there is more to this problem. It's not just an import-export imbalance. The way China sees it, that there's also a very big difference in savings rates. Now, in China, we see households save an average of 2/5 of their income, and many of that money will flow back into the United States in the form of investment, in the form of tourism or other spending, whereas in the U.S., comparatively, households save almost nothing. So there is a bit of a disagreement on how this issue exists. And because of this key disagreement, it's really difficult to see how they might come to agree on a solution to this problem.
Indeed. We'll keep a close eye on that. Thank you very much. Katrina Yu, France 24's Beijing correspondent. Well, we're going to take a look at the markets now. Asian indexes mixed on the whole as investors look ahead to those trade talks without a whole lot of optimism. The Nikkei in Tokyo is closed today. It's off for a holiday. Shanghai is actually up by 0.25%. We're not seeing that right here on the screen, but it is up 0.25%. Hang Seng in Hong Kong down by 1.3%. We see, and the Kospi is off by around 0.5%. Well, here in France, Emmanuel Macron has sparked controversy after announcing he wants to scrap a so-called exit tax, which penalizes people who take assets out of the country. French president told Forbes the measure was discouraging investors and entrepreneurs from setting up a business here. Alex Alcott explains.
Emmanuel Macron hailed as the leader of the free markets on the cover of Forbes magazine. Inside is a headline-grabbing announcement, scrapping the so-called exit tax.
The exit tax sends a negative message to entrepreneurs in France because it means that beyond a certain threshold, you're penalized if you leave.
Introduced by Nicolas Sarkozy in 2012, the exit tax aims to dissuade entrepreneurs from relocating their assets outside of France. Currently, if French residents want to move their assets overseas and they own 50% or more of a company, or possess stocks and shares worth 800,000 euros or greater, then they have to pay 30% of their value to the French taxman. Politicians on the left and right have criticized Macron's announcement.
A few weeks or months ago, Macron said that we will lower taxes for the richest so that they will invest in the French economy. But now he's saying not only do you not have to pay taxes, but on top of that, you'll be able to put your money overseas. We're in a madhouse.
The
richest in our country are already well looked after. But us workers feel like we've been forgotten during Macron's first year in office.
The French Finance Ministry has defended scrapping the exit tax, as it says it generates less than 100 million euros a year. But the announcement comes at an awkward time for Macron, as France is hit by multiple workers' protests, and it will only reinforce his critics' claims that he's the president for the rich.
And that's it for the business news for now. I'll be back in an hour. Back to you, Tom.
Brian Quinn, thank you very much.